Welcome back, everybody, to Catapult Your Business, where we're going to help you grow and scale your business. And we do that one question at a time. We've got a good question today. As always, we're going to dig into how do you get your head wrapped around financials? I think we all know as business owners, financials can be this black hole, right? It's that thing we want to avoid. A lot of times because we don't know the know-how or we don't know how it works. We're just trying to operate within whatever's in our bank account and just staying alive. It's just a game of survival. Well, you've come to the right place if you want to slow down and think through how do I start to get my head wrapped around the financials of my business. And I've got a great expert to join us today. Her name is Stephanie. She's one of an extremely talented advisor for us, hailing in from the beautiful Vegas area. Stephanie, welcome to the call.
Thank you, Casey. It's great to be here.
Glad to have you. I know that you are commonly working with our Cultivate clients and always digging as an advisor around the financials, sometimes even supporting and practically running their financials for them. But before we dig into that, tell me just quickly, give us a little bit of background on you.
Okay. Well, I started my career in the not-for-profit space, ran NGOs for 15 years, then switched to for-profit, co-founded a couple of different companies in different industries, exited them, and decided to become an advisor. And along the way, I got a degree in accounting and ran all of the financials for my own companies.
Love it. So what's cool is you have seen for-profit and nonprofit, which is unique, right? We know there's some similarities, but also differences.
Yes.
But the fact that you've always kind of been attuned per se to accounting and numbers. So this is going to be good, everybody. So get your notebooks out and get ready to take down some notes. Let's just get right to it. The reality is when people want to, as owners, get their hands around the financials of the business, personally, for me, I think it all comes down to mindset first. I don't care what systems or tactics or process we teach anybody around financials. My experience has been, if they don't have the right mindset around this, it doesn't matter anyway. So I'm just curious, do you agree with that? What's your perspective on that?
I really do. It is a mindset. And so often when I'm doing advising with different businesses, they'll ask a question. What do you think? Should I hire this person? What do you think? Should I lease or buy? And so my mindset as that financially oriented person is, I don't know, let's look at the numbers. And so that really is the mindset. If you really want to have a great handle on your financials, it's looking at every decision. It's looking at the business performance through those numbers. That's the key. It's slowing down and going back to that before you pull the trigger.
Well, I know something you've talked to me a lot about, Stephanie, is you've got to think like a CFO. You're constantly, and I know you love that world, right? And
Yes.
big companies, right, have their own CFOs in house, and they kind of help direct the company and run the financials. Lower mid-market companies start to get, fractional CFOs in place and start to run. And you've got smaller businesses where you're leaning on people like us as advisors, or they just have to learn it themselves, right? And a lot of times that's what a lot of owners start to do. So when you think about the mindset and you think about you have to go to the numbers, where do you see usually people screw that up at? Why is it so hard, right? Because I'm genuine when I say most people view their financials as a big black hole.
That is very true. And I think that it's hard for usually two basic reasons. One is that this isn't something that people are born knowing. No one's born knowing how to read financial statements.
Right.
And most people aren't taught that either. And so, you get into business because you're passionate about something. You love being a chiropractor, or you love being a chef, or whatever it is.
Right.
And that doesn't necessarily come with the ability to interpret a cash flow statement. So just the lack of understanding of what the numbers mean, that's sort of one half of the challenge. And the other half of the challenge is not having the data. And I see a lot of small businesses that don't have accurate financial reports. And, oftentimes that's because they are relying on an admin to do their bookkeeping, or their outsourced bookkeeping firm is simply not up to par. And so without the accurate data, it's really hard to rely on it to make decisions. And then that can extend to other kinds of data too, that aren't just in your, QuickBooks software. It can also be KPIs of the business and conversion rates and all kinds of other numbers.
Well, that's for sure. And obviously we believe in this. We believe in it so far. We went out and, acquired essentially an outsourced finance and bookkeeping company, right? Because
Yes.
as advisors, we got so frustrated, not only that our clients didn't have it, but that they were having a hard time getting it from the right vendors. And there's obviously a lot of great vendors out there that can help you do this.
Mhm.
We obviously went that far. So, shameless plug for Breakwater, people looking for a bookkeeper, but you're right. Like I do think that it comes down to a data issue often, but
Mhm.
there is that mindset that you mentioned where it's like they make this decision off gut versus off using the numbers. Like, I mean, I love what you said when you first checked in there, right? Of like, well, people sometimes get annoyed because at the end of the day, I just go, I don't know if you can hire that person. I don't know if you can make that decision. Have you ran it? Have you put it into the numbers? The
Mhm.
math will tell you what the decision is. And
Yes.
that's hard, right? Because often the math will not support the decision as an owner that you want to make the way you want to make it.
It's very true. It's very true. I mean, I have so many examples of this. Recently, I was working with a client who's fairly new to me. We were working together a few months, and we had done a really great forecast for 2024. We are pretty confident in the revenue and the profit numbers we're going to hit. And so we then looked at the next 4 or 5 years and realized the business model doesn't work. That basically the business is profitable as it is, and it will be profitable once it's 3.5 times the size it is now. But it's not going to be profitable in between. And that's a big problem. And so that led to some interesting discussions. We already knew that there were some strategic moves that we wanted to consider. And I said, okay, the place we have to start is the financials. We need to know what we're dealing with. We need to know what our baseline is. That will allow us to determine the right strategy. And so that's one example. But, there are many others. I'm sure you've got them.
Oh God, I mean the path, right? The path that people take, and your example right there. I mean, a lot of people are like, I've always wondered, like, if I kept scaling, would I stay profitable? Most business owners, when they build a business, they don't build the pricing properly
Mhm.
to set themselves up of what it's going to actually take for scale. Two, the business usually pivot and shift, and when they pivot and shift, it usually requires you to make financial changes in the organization. And then three, you have to know, are you willing to raise money? Are you willing to go into debt? Are you willing to lose cash flow to get through the jump and take that risk? Or if you need to sustain your lifestyle with a certain level of profit, you might have to build the business differently. And that might be 2 years slower, or that might, you might have to totally pivot. But again, the math will tell you what path you're comfortable with, your risk tolerance. But if you're never looking at it and you never have your head wrapped around it, and you don't per se become a Stephanie where you're making decisions based on what the math and numbers say, what can happen?
Bad things can happen.
Yeah, bad things.
Are you getting the advice you need for your business from this episode? Do you want to get more than just one question answered and have it customized to you and your business? Well, Cultivate Advisors works one-on-one with thousands of business owners every day. Let them help you scale your business today. Don't just listen to this episode. Take action and go to cultivateadvisors.com to see which advisor you get matched with and receive a free 2-hour business assessment on how you could scale your business to the next level. Act now at cultivateadvisors.com.
Unless
Very
you're
bad thing.
lucky, and you're not going to be lucky all the time.
Right. And most businesses aren't. I mean, it's actually pretty common that businesses between 500,000 and 1 million, I see a lot of them get stuck at that specific spot.
Mm-hmm.
You get to this point where you've got this team, you are running a business that's break even, profitable, you're paying yourself decently.
Yep.
You're not making a ton of extra money. And yet you're so busy, you can't scale the business. And
You
you
also don't have
can't
cash
get
to
cash
keep
flow
investing. Yeah.
to hire somebody to help. I mean, it's just this vicious cycle. And so to your point, there are really only three ways out of that once you've hit that spot. One is you work more. Two, you pay yourself less. Or three, you take on a debt or equity investment. Those are the only three paths forward. And so people like that's not always what they want to hear, but you have to either say, okay, well,
Math.
maybe I need to right size my business and become smaller and more profitable, or I need to be willing to go one of these other routes.
I think that's so crucial though. What you're talking about is scale and size does not always match most profitable.
Mhm.
I think that's just really important lesson that I hope everybody listens, because I think a lot of people, owners and entrepreneurs listening in right now, probably are most likely pushing it out to going, I'll just keep working, I'll keep growing, it'll work itself out. I hear that a lot. The numbers will work themselves out. The problem, like, if it's not working now, it's definitely not going to work later. Like, it's the opposite, guys. It should be really profitable now, and then will you be able
Mhm.
to maintain profitability later?
Yes.
That's the question, actually.
Yeah.
Which is what you're hinting on, and I appreciate it. Let me get more technical, because I know a lot of people come onto this because they want to like grab, one or two things they can grab and take it back to their business. So I think we've had a good conversation around the mindset.
Mhm.
Take me down, like if somebody were to come to you, right? You onboard with clients all the time and you're helping them work through this. Do you have like a methodology or like some type of formation you go through in your mind of like, this is what you have to think about when you want to become financially minded about your business?
Yeah, absolutely. I think there are about 6 different components to that. And
Okay.
the first is the financial statements.
Okay.
So, as an advisor, I will not advise without having a handle on the financials, because I don't want to tell someone, go spend $300,000 on marketing only to find that's going to bankrupt them.
Right.
So, so it's a matter of, we'll look at the profit and loss statement, we'll look at the balance sheet. And if I'm seeing a lot of erroneous data, we're going to get you a new bookkeeper. We're going to get that cleaned up, but we're going to use that data then as the basis for understanding where we're at. So then we can look at where we need to go.
Yeah, and I think when I hear that, right, it's like a lot of people think they have to get to those statements, and it's like you don't. That's where you can use somebody like yourself, or you can go to an outsourced financial firm or a bookkeeping firm to help get a lot of those statements in place, but you still need to learn how to actually use them to make decisions.
Yes.
That's where I think people really miss that. So just make sure everybody's hearing that. All right, so I got number one. What's number two? Number one is statements. What's next?
Yes. Number 2 is budgeting and forecasting.
Okay.
So that means, as I know that, other guests on this podcast have talked about, having that forward-looking forecast of what revenue are we expecting, what costs are we expecting. And part of that is not just making that projection, but then comparing the actuals to the projection. So doing that budget versus actuals comparison. Oh, we thought we were going to have $500,000 of expenses this month, but it was $800,000. Why is that? We need to dig into that. So when you find data that is contradictory, or when the actuals are varying, positive or negative, quite a bit from the expectation, you dive in. So what are you going to double down on? What are you going to stop doing? What are you going to do differently as a result of this?
Well, and it is funny how so many people hear financials and they just think it is taxes. They immediately go, financials are for the purpose of taxes. And the purpose of taxes is to look historically to be able to tell the IRS big brother how much I owe them. That is one component, right? Looking forward kind of matters too. And I've always said looking forward is the operational side of
Mhm.
financials. Looking backwards, you can definitely learn from it historically to project better. But a lot of
Yes.
times looking historically is to report back to tax
Mhm.
agencies
Yeah.
and to make sure things were done, properly. So great. All right. So we've got budgeting and forecasting. You've got to have that. You've got to have your statements to be able to even be able to budget and forecast. So I see
Yes.
how you're building on top of each other here. What's number three?
Number 3 is cost management and cost optimization. So one of the things that an exercise I'll commonly take clients through is, we'll go line by line through the income statement, i.e. the profit and loss statement. And we'll look at what we're spending in each of these categories. And we'll say, can we cut this? Can we cut this without dramatically harming the business? In other words, and looking at that, then we also look at vendor by vendor. How important is this? Can we find a more cost-effective alternative? We'll even look at things like, for example, just the other day, I was talking with a client about securing terms to give us more cash flow runway, especially when we're taking on bigger projects where we're fronting a huge amount of cost up front before we get paid. So the labor, the materials, et cetera. So looking at the key cost drivers, and then looking at ways to, reduce the costs of operating. Because if we can improve our margins, the fastest way to increase profits is not to grow revenue, it's to reduce costs, because that's pure profit. Increasing revenue, there's always increasing costs that are associated with it. But every dollar we save goes right into the owner's pocket or into the war chest.
But it's hard, right? As an owner, I mean, everybody listening in has felt this. It's like you practically have to go like line by line,
Mhm.
right? It's in the minutia. You got to slow down. Usually you need a third party to help you, which is, I know a lot of our advisors, I know you're very good at this, Stephanie, right? Because owners
Mhm.
just can't do it themselves. And you have to
Yes.
be challenged. You have to be asked, well, why are you spending that? If I said you couldn't spend that anymore, what would you do instead? And all of a sudden you start to realize, oh, I could actually do that. And it's one more step for my team, but if we did that, it would drop this. Wow, I probably should actually make that happen.
Mm-hmm.
Yeah.
Yes.
And one of the things that I used to do, Stephanie, is with a lot of my clients when we were first founding Cultivate, I actually would go in and go, your job is to grab 1% of margin a year on cost optimization. Like when we went into each year, I just go, you got to find 1 more percent that's going to hit your bottom line for you. Where are you cutting?
I
And you'd
like
be shocked where you could start to do it. And again, it didn't always work out, but it was just a really simple mechanism that you could kind of teach yourself.
Thanks for tuning in to Catapult Your Business, where Cultivate Advisors is helping you catapult your business one question at a time. Are you running your business, or is your business running you? At Cultivate Advisors, they'll match you with an expert advisor and do a free 2-hour deep dive for your business. This will give you the clarity you need on how to get your business to the next level. Cultivate has worked with thousands of businesses. What do you have to lose? So head over to cultivateadvisors.com and sign up for your free 2-hour session.
I've got statements, I've got budgeting and forecasting, and now I've got cash, the actual cost management and the optimization of these expenses to trickle down more additional profit. Where are we going next?
investment and funding decisions. Now, not every company requires investment and funding, but it's very common that companies either secure investment or funding to start or to scale. So when we're looking at that, there's a couple of different ways you can approach that. And so looking at what makes the most sense, what are the different options? And so typically you're looking at either loans, i.e. debt, or you're looking at equity, where you sell a portion of your company to somebody else in exchange for money that they're going to invest in. Or they give you and you invest into the business. So there's pros and there's cons to this. And beyond just like debt and equity, there's, well, who's lending you the money or who's investing in your company? So there's a lot of different components to that that you could look at. For example, commonly I talk about the friends, family, fools. I say anything under $1 million, that's friends, family, fools territory. You go to people you know and you show them your packet of materials. Here's my plan. Here's what I'm doing. And you raise money. And that could be debt. It could be equity, either one. Then there's the more institutional routes, and that can be alternative lenders. It could be bank financing, depending on what's needed, real estate, equipment, et cetera, what your financials look like. And then there's also even at a larger scale, private equity or venture capital. That's not for most companies. That can also be on the equity side, of course. And with the equity, the financial numbers are not the only component. See, the thing about debt, people just give you money, you just have to give it back. But equity, are they going to have a decision-making stake in the business?
Right.
Are you okay with having to answer and having to, have that kind of partner?
Well, and to bring it back up even into the clouds for people, like I think what you're really saying, what I'm hearing actually is just more down to the root of a lot of people don't operate with enough cash. They don't realize actually what you're really talking about is like debt does not have to be bad. Giving up a little bit of equity to de-risk your position and have enough cash to get to the next level. Back to our example we were talking about earlier, right? You have a client they get stuck at that crux and they can't get over the valley, right? Well, a lot of times if you bring in a cash provider or you bring in a partner on the cash side, if it's debt or equity, it can help you streamline that. All right, I know we're running out of time. Give me number 5 and 6.
Okay, so number 5 is looking at a return on an investment or comparing two different options, one against the other. So if you have $500,000 of free cash flow, what should you do with it? Should you go buy some more vans? Should you hire some people? Should you take a distribution? Why? Why? What, from the perspective of not only your goals, but what's the return on that? Should I go sink that money into buying a building? Well, what kind of return am I going to get on that? Versus what kind of return am I going to get if I can expand my operations by, putting more vehicles in my fleet and putting that on the road? Not that the calculation is strictly about how much more you can make, because sometimes you're looking at risk management and how do you de-risk and hedge. And so then that's also a calculation to look at and factor in. And then number 6 is just general performance metrics and KPIs. So, of course, that's like things that are financial ROI, profit margins, et cetera. But it could be inventory turns in a retail setting. It could be revenue per employee in a professional services firm, stuff like that.
What I love about number 6, though, is that if you start to get those KPIs and those visualizations of those metrics done right, they often become the leading indicators to let you know you're getting ready to have something break with your financials.
Yes, financials are the lagging indicator. And if you like, you can get data from them to guide decisions, but if you focus on the leading indicators, the financials will work themselves out.
Usually, if you've built the model properly.
Yes,
Yeah,
exactly.
well, no doubt. A lot of people I know, they make a decision on gut, right? And I know that's a common kind of pain point that people do, right? Is they come in and it's hard, right? It's like you're going day to day, you're trying to survive, and it's like, I think I should do this versus going, well, if I'm going to go spend $10,000 in marketing, how many clients do I have to get back? How much margin is that going to generate? When will I see that cash come back? Am I willing to take that risk? So it's always that risk and reward. And I think you just have to train yourself to think like that on every single decision as it relates back within the, the models that you create. So Stephanie, wealth of knowledge, not surprised. I got the 6 things is get your statements down and get them reconciled and have the information you need to be able to run the business. 2, make sure you're budgeting and forecasting and stay within those budgets and forecasting. There's a reason why you set it up the way you did it. 3, look for cost optimization and cost management. Always be looking to lower those expenses before you get so excited just about scaling and growing revenue. That'll drop more bottom line quicker. 4 comes down to investment in institutional. I kind of drove over that and just said, really, just make sure you have enough cash in the bank to actually get to the next chapter you're trying to get to, enough fuel in the tank per se. Number 5, measure all decisions through an actual return on investment and understand that return on investment doesn't just mean you should keep deploying. It's also about de-risking. And then 6, and finally, financials are a lagging indicator, but if you can get these, key performance indicators and really start to look at some of the most important metrics in your business, it'll start to tell you what the success of financials are going to be. And that feels a lot better when you go to bed and you can actually sleep at night and stop wondering, can you cover payroll this period? Because you have enough cash and you know the metrics are in your favor.
Yes, exactly.
I mean, if anybody listening here doesn't feel like they just walked away with like 101 level of MBA of financials for a business, I don't know who you are, but I assure you, if you actually dig into these 6 things, more importantly, if you're like, I don't know half the crap they're talking about, go to our website to Cultivate, jump on, say, hey, I want a meeting with Stephanie Magurno, and we'll get you set up so you can have a conversation with her. Stephanie, thank you so much for being here, and thank you for taking some time to share some wisdom here with everybody listening in today.
Thanks for having me. It's been great.
Love it. Well, my biggest takeaway for sure is that even though in the moment, I know I should have a financial mindset, sometimes when I get going and I get so emotional and passionate about a decision, I look past it. And those are usually the decisions I regret. So if that's you, do your best to get your hands around the financials. And I promise you, you'll be set up for so much more success, and it'll be less emotional of a roller coaster ride because you know you've got financials behind you. That's it for Catapult this week. Thanks for joining us. We'll see you next week for another edition of asking one question and answering it to help you grow and scale your business. But until then, keep living your best life as an entrepreneur. We'll see you next time.